The world of emerging market currencies is pulsating with unexpected energy today as the Iraqi dinar stages what may be its most dramatic surge in recent memory, leaving analysts, investors, and governments scrambling for answers. Just hours ago, the currency began to climb with such force that the term exponential seems inadequate. In the matter of minutes, the dinar that long languished in obscurity began to ascend, leaving behind all notions of stagnation. The sudden surge has sparked a wave of excitement tempered only by caution, as investors and financial institutions race to evaluate the potential implications for Iraq's economy and for markets stretching across borders. This is not a muted uptick. This is a surge so intense that it has forced financial commentators to revise forecasts midday. The Iraqi dinar, historically undervalued and often overshadowed by geopolitical concerns and oil market swings, is riding a wave of renewed confidence and speculative momentum. The market response was immediate and dramatic. Trading desks reported record order volumes as buy orders overwhelmed sell-side liquidity. The dinar's value began its climb and never let up, ripping through resistance levels that had held for years. The volatility indices lit up. Traders talk of 6+% gains in some crossings, though these numbers remain fluid as exchanges struggle to keep pace. Behind this move lies a convergence of forces. Signals out of Baghdad hint at renewed efforts to shore up monetary control, possibly preparing for reforms long on the drawing board. Meanwhile, whispers of a return to stronger ties with Gulf central banking partners and international institutions have fed rising optimism. There are murmurings of fresh foreign reserves backing the dinar, potentially paving the way for a more anchored, credible value. Still, it is speculation, and speculation breeds both promise and peril. Observers note that without full transparency and confirmation from the Central Bank of Iraq, the situation remains a volatile whirlwind beyond complete control. International investors and expatriate communities have been particularly quick to react. Dinar-holding individuals and funds that had sat on the sidelines are now flooding in, hoping to ride the wave to outsized returns. Front-page headlines in financial newsletters and WhatsApp groups are ablaze. From pennies to power, dinar on the rise, RV news breaking. Sentiment is running high. Fear of missing out has become palpable. Social media chatter and investor forums are lighting up. Some are even comparing this to currency ramps seen during pre-revaluation phases in other emerging market stories, while others fear it may simply be a short-lived spike destined to collapse. Amid the excitement, institutional players counsel prudence. Cautionary notices are emerging. Rapid appreciation can invite equally rapid corrections. Thin liquidity markets can exaggerate moves, sending prices up rapidly, and then down just as fast. Arbitrage desks question whether there are enough centralized clearing channels for these flows or whether what we're seeing is a cascade of over-the-counter trades executed outside conventional frameworks. Too early to say whether this is a structured rally or the kind of speculative geyser that could leave retail investors burned when the music stops. Meanwhile, governments and regulatory bodies outside Iraq are scrambling to analyze potential repercussions. Trade balances, remittance flows, Forex market stability. All could be affected if this appreciation sustains. Central banks in the Gulf and beyond may need to recalibrate swap lines or hedging strategies. Financial stability mechanisms are being dusted off, and global risk teams are poring over exposure scenarios lurking on bank ledgers. On the ground in Baghdad, sources close to the central bank say meetings are underway. Analysts report that the policy-setting committee has convened emergency sessions to discuss whether to intervene. If reserves are indeed being deployed to defend a newly rising rate, that would signal a shift toward managing the dinar as a more serious instrument. But if intervention is delayed or muted, the market may interpret that as tacit acceptance of a new, elevated floor. At the heart of all this, the ordinary Iraqi citizen may soon feel the ripple effects. A stronger dinar could bring relief for importers, who pay less for fuel, medication, and machinery. Small businesses that rely on foreign-denominated inputs may see narrower margins, easing inflationary pressure. But exporters and workers in oil and agriculture could see revenue erosion if demand shifts. The net outcome depends heavily on whether this surge represents sustainable valuation correction or a speculative frenzy. News channels across the region are breaking in with rolling coverage. Anchors present live charts tracking the dinar's climb, while economists appear on screen, some in disbelief, others cautiously optimistic. Market watchers in Dubai, Istanbul, and London are now dialed into Baghdad's ringing telephones. The message is clear. No one involved in cross-border finance can afford to ignore this rare roar from a currency long dismissed. Yet amid the buzz, the most important compliance precaution stands. This is not confirmed revaluation, and no central bank or government has issued formal notice of policy change. The data behind the dinar's rise remains patchy, and many transactions continue in opaque markets. Claims of imminent official revaluation must be taken with a grain of salt. History offers tales of broken promises, once promised adjustments that never came, leaving investors holding hot air. The memory of those missteps makes institutions that much warier, even while adrenaline spikes on trading floors. That said, some regional analysts believe this may mark a watershed moment. The economic landscape of Iraq has long been shackled by political instability, reconstruction budget volatility, and reliance on hydrocarbons. A credible strengthening of the dinar could provide a psychological boost toward diversification policy, signaling to energy investors that currency risk is being tamed. Market capital inflows, long deterred by currency uncertainty, might now consider Iraq as a less forbidding frontier. Still, to translate this surge into sustainable momentum, the signal must be reinforced by real policy action, transparency on reserves, credible monetary frameworks, and market access to perform support. Baghdad will need to walk the talk. Otherwise, this excitement could collapse under its own hype, leaving investors disillusioned, credit spread watchers grim, and financial markets bracing for another correction. For now, headlines are the early lap in the race. News feeds are awash with phrases like dinar rocket, unexpected rally, and currency phoenix. In investor bulletins, clients ask about remittance conversions, hedging strategies, tax implications, and repatriation options. Custodians are reviewing whether to update risk weightings for dinar-denominated positions. Legal departments are on standby, reviewing local currency laws to understand how exposures may shift in capital adequacy ratios. Meanwhile, institutional flow desks are calling their partners in Baghdad, Abu Dhabi, Amman, and beyond. The region's macro hedge funds are digging into order data, verifying whether the move is organic demand or a handful of big trades shifting market structure. Liquidity providers are reviewing bid-ask spreads, noting that spreads have widened sharply even as mid-price jumped. That dual movement is a hallmark of turbulent price discovery, illustrating why professional-grade caution is essential. Despite all the alarm bells, for strategic investors this may be the opening to reassess Iraqi macro risk. The central bank's next steps, particularly regarding communication of policy, will be pivotal. If Baghdad moves to formalize exchange rate bans or to publish a roadmap for dinar revaluation, institutional interest could accelerate. On the flip side, silence or erratic messaging could undercut confidence, fueling speculation that today's moves were nothing more than a blip.